Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom.
So we've completed the most comprehensive analysis of Australian seven-figure plus business owners on their financial performance and the financial bottlenecks that are holding them back from the financial independence that they're looking for. If you're a seven-figure business owner operating in Australia, you're looking to improve your financial performance so you can create financial freedom faster, you're going to want to listen to this video. Now, there is a fundamental flaw that exists in all of the seven-figure businesses that we have surveyed. The vast majority of them experience what we call cash flow bottlenecks. In isolation, these things are almost invisible, seemingly unimportant, but when they collect, they compound, they magnify, and they grow, and they cause an almost invisible cancer in your business that is incredibly hard to diagnose, but once diagnosed can be very, very quick to resolve. And the fundamental basis of this is what we call the profit foundations framework. I put together some insights from this scorecard and the results so I can share with you exactly what this means and, more importantly, how you can apply it. This could be worth tens of thousands of dollars of opportunity to you. Now, if you haven't completed the financial performance scorecard yet, click the link below, go to wealthhealthcheck.com.au, complete the scorecard. It'll take you about 5 minutes. You'll get your own customized report. It'll help you work out exactly how you contextualize this information specific to you. Now, based on the analysis, there are only 39% of multi-seven-figure businesses that are truly profitable after taking a market reasonable income for the owner. And here is the systematic approach they all use. One, they use what we call the profit mastery machine. So there is a traditional formula that all businesses tend to follow, right? It's common sense that revenue minus expenses equals profit, right? It's called the bottom line for a reason, right? If you look at your financial statement, you've got revenue at the top, then you've got all your expenses, and then you've got profit. Now, that psychology means that you're putting profit last. And when we put profit last, it means that it is an afterthought. It's a byproduct. And usually it means that you're going to have far less than what you really want. The alternative approach is revenue minus profit equals expenses. This shines a light on what we need to do to create a sustainable and scalable financial model in your business, right? What we do is we say, okay, this is the revenue that our business is producing. This is the profit that is non-negotiable that we need to extract. And therefore, this is the maximum amount that we can afford to spend to achieve this. Now, this facilitates what we call the come to Jesus mode, okay? For so many business owners, they go, Jackson, I can't do that, right? Like, I'm making $1 million in revenue. I want to make $300,000 a year in profit. I can't do that spending only $700,000. It's more expensive than that. Well, that now presents the real problem. What levers do we need to pull in the business in order to produce $300,000 in profit? Can we reduce and optimize expenses? Do we need to increase top line revenue? Do we need to increase price? Do we need to get more clients? Do we need to improve workflows and efficiency in the team? It allows us to actually define the real problems and address those as a priority, okay? The idea of this system is that it creates an immediate accountability to profit allocation. It forces us to be resourceful. 2, we create separate accounts for this, so it makes it very, very easy for you to have transparency. I can pull out my phone at any time of the day. I can look at all my various accounts, which all have a specific purpose, and I can see exactly how much money I've got for various things. And it forces expense discipline. By being resourceful, it makes you be more creative. It puts the power back in your hands as opposed to just waiting to the end of the month, hoping that you've got profit. And the reality is you're not going to end up getting the kind of money that you want if you think that kind of way. And this focuses on systematic wealth building because it's not your earned income that makes you wealthy. It's what you do with it that counts. So our job is to take a seven-figure business, turn that into seven-figure profits, take that seven-figure profit and turn that into multi-seven figures in wealth. And that requires us to be systematic, okay? So here's the implementation step that we found that are the most successful businesses, that 39% of businesses that are actually producing the kind of financial returns that they want. 1, they open separate accounts. We usually set up an income account, a cost of sales account, an operating expense account, an owner's pay account, a tax account, and a profit account. So that's 6 bank accounts. You might be saying, Jackson, that's too much. Just start with setting up a separate profit account. And even if it means that you put $1,000 a week, even if it's $100 a week, whenever money comes into your account, you put money into profit first, and then you focus on running your business on what is left. Start as small as you think that you need to, and then compound that activity over time. Really, really simple. Now, set that target. Set it as a percentage. So it might be 1%, might be 5%, might be 10%, might be 20%. Hey, it might even be 30%. Be realistic and make sure that it's the right starting place, okay? Or if you prefer, set a dollar figure. It could be $500 a week, $1,000 a week, $10,000 a week, whatever the number is. And then make sure that you sweep that money on a weekly or fortnightly basis. And once it's in the profit account, you don't touch it. Be resourceful. Focus on anything else that you can do to avoid having to touch that profit money. Because sure, you can touch it, but you're borrowing, more importantly, stealing from your future self. And that is a symptom of an insufficient financial model to get you where you want to go. Now, pillar 2 is revenue predictability system. So there are 76% of businesses that we surveyed over 7 figures that are lacking recurring revenue. So what do I mean by recurring revenue? This is clients that ideally pay us on a membership or retainer. So we set up a subscription that they pay us weekly or monthly for a repeat and recurring service. Now, we have been able to implement this for pretty much any business that you can think of. We've had clients who do air conditioning and HVAC who've been able to put their clients onto maintenance subscription. We've had clients who run dog washers that have put their clients onto a membership with regular service delivery. We've done this even in allied health businesses. It's important to understand what is the value that your ideal clients could want from you on an ongoing basis, and then how do you provide them with the peace of mind and certainty around delivering those outcomes in exchange for them committing to an ongoing payment to you, which is on a weekly or monthly basis ideally. Now, you may think that it's a step too far. So the next interim step to getting to that point is creating a service and communication schedule. So let's say, for example, that you are a residential electrician and you have a client that calls you to install a new power switch, okay? When you go and you meet that client, you say, Mr. and Mrs. Client, we do things differently. What I'm going to do is I'm going to do the light switch for you, but I'm going to go through your home and I'm going to do a 40-point energy, safety, and efficiency health check. And I'm going to put together a scorecard for you of all of the things that I've identified that could potentially be issues that you may need to fix. But we're also going to have a conversation around your wish list of other things that you might want to solve. And we're going to put together a timeline over the next 12 months of how we approach solving those things. So what you have the ability to do is have a conversation. Hey, Mr. and Mrs. Client, I can do this light switch for you today, but I've picked up these other things and you've told me that you've got these other things on the wish list. Do you want me to just do the light switch that I came here for? Do you want me to tackle everything that I've picked up here today and that we've discussed? Or would you like us to break that down over the next 12 months and then we'll do it in tranches? The benefit of this is that you now have the permission to reach out to that client for that extra work, which allows us to maximize our lifetime customer value and start creating recurring revenue, not just waiting for the phone to ring. So what we need to consider is every business should be understanding what is it that they can be doing to add value to their clients and customers over the long term. And most importantly, how do we address those issues and maximize lifetime customer value? Then 2, how do we either break that down into a delivery schedule over a period of time and a fixed payment? Because if we can take payment out of the equation and say, hey, we're going to deliver these things, you just pay us this weekly and monthly and we'll take care of all of the rest, it reduces so much anxiety and stress from your customers and clients. Or 3, create a contact and communication schedule for those future works. So you've got reasons to call back those customers and do those future works, which is essentially recurring revenue as well. Just we haven't systemized the collection of that cash flow on a regular repeat basis, which we can solve later. Once again, you can have the excuse of, oh, my industry doesn't do this. It's not commonplace. This is foreign to me. Or you try and solve this. And this is the way you get off the cash flow roller coaster, by creating repeat and recurring revenue in your business. So we had a client called Maria. She was doing $2 million a year in project-based revenue. And we were able to transition that into about $1.8 million in recurring revenue. So the clients that she was working with were corporate clients. Each time they'd reach out, she'd have to do a tender, send them a proposal, they'd accept it. And so what she did is she just said, look, we're going to do a discovery workshop. That discovery workshop was paid. We're going to scope out all of the projects that you want to do over the next 12 months. And either you can pay them on a project basis, or we can do it on a retainer subscription basis. And I'll give you a 10% discount if you pay equal installments each month over 12 months. The vast majority of our clients opted in for the subscription, which actually meant that they were doing more business with her because they didn't have to be reactive and say, no, we've got to do that project. Let's reach out to Maria. It held them accountable to doing the work because it removed the complexity of the billing process, and it also increased profit margins. And what also we added is $800,000 in project revenue because it allowed us to identify out of scope work, which allowed it for additional upsells and projects for those things. Same client, fundamentally different packaging. And as a result, we were able to increase her profit by $600,000 a year. It's pretty significant. Let's talk about pillar number 3, which is cash flow forecasting. So of all of the 7-figure businesses that we surveyed, 51% of them cannot accurately predict their cash flow, right? You're running a multi-million-dollar business with bank balance accounting, and you've got absolutely no idea your trajectory of where you're traveling. Like, professional wealth builders need proper cash flow forecasting. So what we need is a 13-week rolling forecast. Why 13 weeks? 13 weeks is easy enough for us to solve a predictive cash flow forecast for your business. What does it require? It requires us to understand the inputs or the lead indicators for your business. So cash flow is a byproduct. It's a lag outcome of activities that have happened to get that lag outcome. So we need to reverse engineer it. Well, for you to have cash in the bank, you've had to get paid. You've had to also pay your bills, right? For you to do that, you've had to invoice the client. To invoice the client, you've had to get to a certain project stage or get acceptance from the client. To get acceptance from the client, you've had to send them a proposal or give them a quote. To give them a quote, you've had to scope and do a discovery session. To do a discovery session, you've had to qualify and do a triage session. To do a triage session, you've had to get a lead. So what that allows us to do is to set lead KPIs for all of these precursor stages that, if achieved, will create a lag indicator. If we know what the inputs are, we can accurately forecast the outputs being cash flow. So what we want to do is we want to do multiple scenario planning. We want to do what's called a 3-way forecast, a good, better, bet. And I like to refer to this as our bare ass minimum, or our BAM. This is the bare minimum acceptable standard that we need to produce, okay? That's the floor. Then we want to create the WIG, the wildly important goal. This is our best case scenario. And then we want to do a mid case, somewhere in between. So the goal here is that we want to find ourselves at some place between those 3 scenarios. Ideally, we want to be between the second and third scenario. And not ideally, we want to be between the first and the second scenario. And of course, we don't want to be below the first scenario, right? Because that's our minimum acceptable standard. And through repeating this process, we create a more predictable forecast. Ideally, we want to bring it within a 10% plus minus variance. And further to that, we start getting better at being able to extend that forecast. So from 13 to 26 weeks. And for some of our clients, they can even forecast accurately 52 weeks in advance with a 10% plus minus variance. It's pretty impressive. So the important step here is that there are foundations to your profit that are fundamentally different when you're below 7 figures to when you're above 7 figures. Prior to 7 figures, you focused on sales. Like, really, getting to 7 figures is a sales game. But getting to 7 figures in profit is having system. So if you haven't done so already, I want you to complete the financial performance scorecard. Click the link below, take 5 minutes, complete the scorecard. It's going to give you a customized report that shows you what profit opportunities are you leaving on the table. And as a bonus, it's also going to go through your tax opportunities and your wealth opportunities. That will help you evaluate your low-hanging financial fruit, and it will give you some actionable insights of what you should be focusing on to move that needle forward. So click the link below, complete the scorecard. Let's get you that customized report, and let's have a conversation around how you can start working towards the profits that you deserve.